Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 5th, 2026, and we're diving into Verastem Oncology's latest earnings report for the fourth quarter and full year of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Verastem Oncology has been making significant strides in the biopharmaceutical sector, particularly with their focus on RAS-MAPK pathway-driven cancers. I'm excited to discuss their recent financial performance and strategic developments.
Revenue and profitability overview. Let's start with the revenue figures. Verastem reported net product revenues of $17.5 million for the fourth quarter and $30.9 million for the full year 2025. How does this compare to their previous performance, John?
These figures mark a significant improvement, considering they had no product revenue in the previous year. The launch of AVMAPKI FAKZYNJA CO-PACK has been pivotal, contributing to these numbers. However, the company still reported a net loss of $32.9 million for the quarter, translating to an adjusted EPS of -48 cents, which slightly beat the forecast of -49 cents by one analyst.
Product launch and market response. The AVMAPKI FAKZYNJA CO-PACK has been a major focus for Verastem. Can you tell us more about its market performance and any challenges they faced?
Absolutely. The product generated $17.5 million in Q4 alone, following its FDA approval in May 2025. It's specifically targeted at KRAS-mutated recurrent low-grade serous ovarian cancer, and the response has been positive among oncologists. However, the NCCN guidelines did not expand recommendations to include KRAS wild-type patients, which is a setback for broader market adoption.
Research and development progress. Verastem has also been advancing its R&D efforts, particularly with VS7375. What are the latest updates on this front?
Verastem is making headway with VS7375, a KRAS G12D inhibitor. They've cleared multiple dose levels without dose-limiting toxicities, which is promising. The FDA has provided feedback, and the company is now planning Phase 2 registration-directed trials. Financially, they have a solid cash runway extending into the first half of 2027, which supports their ongoing R&D initiatives.
Financial health and strategic outlook. Let's discuss Verastem's financial health. How are they managing their expenses and cash reserves?
Verastem ended the quarter with $205 million in cash and investments, which is a strong position. However, their operating expenses have increased significantly, with R&D expenses up by 52.4% and SG&A expenses by 125.9%. These increases are largely due to their aggressive R&D and commercialization efforts, particularly for AVMAPKI FAKZYNJA CO-PACK.
CEO's vision and future prospects. What insights did the CEO, Dan Paterson, share about the company's future direction?
Dan Paterson emphasized the transformative nature of 2025 for Verastem, particularly with the FDA approval of AVMAPKI FAKZYNJA CO-PACK. Looking ahead, the focus is on driving a strong product launch and accelerating the clinical development of VS7375. The company is prioritizing sustainable growth and is set to initiate Phase 2 trials in pancreatic, lung, and colorectal cancers in 2026.
Key takeaways. In summary, Verastem Oncology has shown promising revenue growth and strategic advancements, particularly with their new product launches and R&D progress. Their financial health remains robust, with a cash runway into 2027. Thank you for joining us, John, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Verastem's performance in the comments below.
Thank you for having me. It's been a pleasure discussing Verastem's exciting developments. Looking forward to seeing how they continue to evolve in the biopharmaceutical landscape.